welcome to all of you, Mazen, Danielle, Felicity. It's great to have you with us. And today we'll be discussing about the scaling up of finance for all these things that we care about when we talk about green transition, green finance, so green energy, smart infrastructure, water, and so on. And as was mentioned before, also by the commissioner, Europe is one of the leading entities in the world in financing climate finance, green transition, and so on. So you being coming from all these sectors that you support, finance, doing things on the ground, also doing things on the ground from the Mazda side, you can help us understand how we can scale up between Europe, the GCC region, and the broader context. So what I will do is I will start with an opening question for all of you. And I would like you to introduce yourself and say your first thoughts about how we can really do more in the sense of working between DFIs, development finance institutions, investors from the Gulf, actors on the ground on scaling the EU GCC MENA triangular participation. I just want your first thoughts about that. And of course, I will start from the ladies. So Felicity, would you like to go first?
Thank you very much for the question, and thank you for the invitation to be here, and thank you to everyone who's sitting here almost at lunchtime. I think the key drivers for the work that we're doing together aren't a simple silver bullet, but are actually a combination of three things, which is what's probably in the silver bullet, which is partnership, and that is what's driving action, which is blending, bringing in concessional finance with commercial private finance to bring private finance to action. And clearly, clear policies cannot overestimate that through testing, piloting, and scaling. So these are the things that we're working together and what really are, I think, driving all of our collaboration here on the panel today.
Fantastic. Thank you, Felicity. Danielle?
Great. So what we do is we develop projects. So the last 12 years, we have developed a portfolio of about 5 gigawatts of projects across North Africa and emerging Europe. And what we do is we allow investors to come invest in those projects through funds at cost, which we think is a better way to invest than investing through energy companies where you have to deal with valuations, etc. We've been doing that for 12 years, and what EBRD and EIB and other European multilaterals have allowed us to do is to really get us to a scale where in Europe and Egypt, for example, we have a few projects in the $500, $600 million category. Across the Western Balkans, we have about $500 million of projects. And we have been able to demonstrate two things. That if you get to that scale, you can do that profitably. The investors in our first fund received a total return of 22%, which is very good for the industry. But the second thing that we have demonstrated, you can do it in a bankable way, where all of our revenues have been in dollars, all of our contractors have been large European EPC suppliers. EIB has helped us to mobilize people like EFSD Plus, which have allowed us to lower the cost of financing for European manufacturers. And we have identified about $200 billion of additional growth opportunities that are needed for very similar investments. So our industry has been very much been led by Masdar, people like Aqua, government-affiliated institutions, if we can refer to them like that, who have definitely advanced the needle. But to be able to fill the gap to 200 billion, that's where we hope Alcázar come in, and hopefully one day many more private equity funds to be able to fill that investment gap in that MENA region and emerging Europe region with private capital.
Thank you very much. Thank you very much, Daniel. And let's see how this same question is read from the Gulf side, from the UAE and Masdar. Please, Mazen.
Sure. So just for context, as an introduction, as you mentioned, at Masdar, we are a pure play renewable energy company. So we build, own, operate renewable energy projects at utility. We're one of the largest renewable energy companies today with our overall capacity north of 50 gigawatts, and we have ambitions to grow to up to 100 gigawatts, making us one of the largest, if not the largest, renewable energy company by 2030. So in the short term. So track record of delivery and ambitions to grow significantly over the years. I think to your question of what helps, let's say, scale and accelerate, I think if I boil it down to one word, it's predictability. It's predictability in terms of cash flows, predictability in terms of regulation, and predictability in terms of offtake arrangements. When it comes to investing in this space, we, especially companies like ours, we're not looking at a 5-year, 7-year, or 10-year return. You're investing in an asset which has a 20, 25, sometimes even 30-year return profile. So you're a long-term shareholder. And therefore, having that predictability over the longer term is extremely, extremely important. So I would say predictability in regulation and mechanisms that give investors the confidence, and then obviously make projects bankable and result in partnerships with the likes of DFIs, including EBRD.
Well, thank you very much for adding the final word, partnerships, because I heard from you vision and scale. I heard predictability, and Europe being so regulated, at least it's predictable because you know what you expect. And then you added partnerships. So I think all of you covered exactly the general, let's say, view of what we wanted to do. But let's move now from theory to practice. And Felicity, I'm turning to you again, because EBRD, that you represent here and you do the strategic work for all this, has been working with Infinity Power, Mazda's, Aqua Power, and so on, and you made projects happen. Would you like to share a bit with us from thinking to making it happen, how this collaboration is actually instrumental in this?
Yeah, thank you very much for the question. I'd like to give 2 case studies which illustrate how we actually do it, but both in Egypt, in the Gulf of Suez. So common problem Egyptian government faced was how do we drive investments in wind and secure low tariffs, common problem. High perceived risk in Egypt due to lack of clarity about policies and high cost of capital as a result. So the EBRD worked together with the GCC to bring in investors and then looked for an additional concessional grant from the Green Climate Fund to drive down the cost of capital and to set an example of how to overcome what is often perceived risk. And in this way, we're coming to your point about predictability, but to build predictability, you need these positive stories. And so that's what we were doing. And we were able to achieve, through that investment of a 650 megawatt wind farm, a tariff rate of 3 cents per kilowatt. Now, that was very low at the time, but that led, because it became more predictable, to a bigger investment opportunity where we scaled to 1.1 gigawatts. So this is the largest currently. It's going to be beaten, but the largest scale in Africa, in the Gulf of Suez, in the Amun project. And that was then able to achieve a much lower tariff of 2.85 cents per kilowatt, and was supported by a commercial banker, Standard Chartered. So you see how what we do is you come in, you start at a certain scale, that predictability, which I really think is a great term, thanks, then drives security, and then we can move on to a bigger scale. And we need that scale. And we need to keep pushing as a DFI to really drive that story and push for more, because we are facing a climate emergency.
That's amazing. Let me stay for a second to what you said about predictability, not only allowing the project to happen, but once you have secured that point, then it allows the project to grow, which is amazing if you think of that, because if you go in terms of chronology, a few months back before you achieve that point, you don't even know how the project will go on, and then you're looking at something that goes bigger. And that brings me now to you, Daniel, because you have actually, and Alcazar has actually done quite a lot of work, both in Egypt, that we heard about, but also in Montenegro, around $500 million, if I remember, which are very important wind projects. And again, in your case, would like to hear the insights from your experience, how collaborating with the countries and also with the FIDs makes it happen from the side of those that make the work happen on the ground.
Yeah, thank you. So when we look at renewable energy investments, the track record in private equity has been spotty, mainly because in North America, Europe, in the oil exporting countries of the GCC, so the wealthy nations of the GCC, have had quite a lot of investment. So you see quite a lot of investors chasing not so many projects. That's why the returns have been in the 5, 6, 7% category that you have seen historically. Then if we look under the hood on, for example, Egypt, which is an oil gas importing country, Alcazar has there a 3 gigawatt portfolio that we have developed over the last 12 years. We were the first private company to sign this BOO program with the Prime Minister of Egypt, following Masdar after a much larger one that they did. And when we look at the fundamental analysis, it's a country that today is 84% dependent on gas. And when you look at the LCOE of gas in Egypt, they are spending about 12 cents per kilowatt hour. You could look at a wind farm, and a wind farm in Egypt, this is public knowledge, these PPAs are at around 3 cents per kilowatt hour. And at 3 cents per kilowatt hour, we have projects that are substantially profitable because of the very healthy wind generation. So what does that do? This allows Egypt to go towards the energy transition, and every kilowatt hour that they displace from gas and replace with wind is saving them about 75% of the energy bill. If they're able to go from the 4%, they're only 4% wind today. If they're able to go from that to the target that they have of 42%, they will be able to save tens of billions of dollars per year, which is important to Egypt because you're talking about Standard Chartered. We're talking to the chief economist of Standard Chartered, and we're asking, UAE and Qatar has done these amazing investments in Egypt of 35 billion and 30 billion respectively during the last weeks and last months. However, the credit notch of Egypt only moved up by 1 notch. Why was the impact not stronger? And what they explained to us is that the debt burden, the amount of debt that the country has, they still need to see a way how that debt will be reduced over time. And essentially, if you're able to free that gas so that Egypt goes from being a gas importer that they are today, they import gas from Israel today, and they can go back to being a gas exporter, which is what they were in 2003, they were investment grade. That would be very helpful to the economy. So that's an example where we're making profits by doing something that makes sense. You switch gears, you go to the Western Balkans, you have places like Serbia, 65% coal dependent, Montenegro, Macedonia, 45% coal dependent, and really very few renewable energy assets to speak of. Masdar has done some of the very, very few ones in the region. And at Alcázar, we started developing a portfolio 4 years ago where we're starting construction together with EBRD across 4 projects that add up to about $500 million. And we had a very pleasant surprise recently where once we had developed the projects, we're able to sign PPA terms with one of the largest American technology companies. So not only our investors are making a return that is as high as any return we've made in our 12 years of existence, but also they're able to make this return by selling the power to an investment grade buyer of electricity. So you're in countries that are adjacent to Europe, that are part of the European energy system. You're making a healthy return because you're in a place that is not crowded with investors. It's a little bit the opposite, if we can say that, and you can do it in a way that is profitable to your investors. So those are some of the examples where we see that if you go away from the crowded investment areas, such as mainland Europe, the wealthy countries of the GCC, and you try to understand where investment makes sense, you can do it in a way that is not only risk-adjusted, but very profitable.
Exactly. No, and I thank you very much for pointing out this dimension because we often say that, green business is good business, but it's also good not only for the companies like Alcázar that is involved in that, it's good for the countries that promote it. And as you said, in the case of Egypt, and it's one of many, you actually liberate and you set free resources that can enrich the national economy, which is fantastic. And I think that there's few, I can think that this is the leading country in the GCC region, the UAE, that has taken this step with Masdar and many others. So
Can I?
would you like Mazen to? Yeah, please.
Can I just add to that? I think just to your point, green business is yes commercially viable, but I think one of the things today is the fact that the ability to roll out and get a solar plant or a wind farm up and running compared to your conventional energy sources, that the difference is massive and it's only getting bigger. So it takes in solar, it could be as early as 12 to 24 months, again depending on where you're operating. While on the other hand, when it comes to gas, it could be 5 years, and other more traditional sources, nuclear, could be 7 to 10 years. So I think that's another very key element, and that's one of the reasons that renewables specifically has gained a lot of attention, especially in the recent past.
Amazing.
Just to add
please,
to
yes,
that,
you really have to say this.
Just to
and I
add
want
to the
you
positive story, it's a 12% reduction in price of solar just last year. So the price is just gaining down, which means your returns just on the investment go up faster. And of course, the country is all the time reducing its imports in many cases, not all cases, but in many cases that are reliant on imports. So it really is an incredible story. Yeah.
Absolutely. And
So
yes.
maybe interesting for the audience, President von der Leyen came to Montenegro to witness the signing of our commitment to this $500 million investment. And I was explaining to her that not only the Europeans are very keen for these countries to stop being 65 and 45% coal dependent, so they can clean up their energy grid. But you look at the cost of power of Montenegro and Macedonia in the wholesale market the first half of this year is 135 euros. We are signing PPAs at roughly half of that. And our investors, right here, are making higher returns that we have made in our 12 years of existence, even when we did the first deals in Jordan that were so profitable and so on. So you are saving them 45% of the energy bill, 50% of the energy bill, or in Egypt, we're saving them 70% of the energy bill, but you're making profits that are well into the double digits. For infrastructure, they're in percentile 92 or something.
You know, and all the time saving on carbon emissions. I mean, I forgot to quote the figure, but in Egypt, the 1.1 billion gigawatt, I mean, the 1.1 gigawatt was saving 7 million tons of CO2. So, you know, you've got this additional co-benefit when you do it of profit, renewable energy, reduced imports, and you're meeting your climate ambition all in one. I mean, really, there's not much to be said apart from why aren't we doing more?
Absolutely, and I don't want to divert this discussion because you guys are amazing how you took it up, and I can just go off and you have the discussion. But what you just said, Felicity, also adds to the discussion that Europe has been leading globally about carbon markets, because that's also a very important one. But we'll not go into that now. What I want to do is, again, I will turn to you, Mazen, because actually all three of you are, in the sense of promoting green business, you're globetrotters. You're doing things around the globe, you're doing things in many different parts, not only of Europe, but the world, the whole world. And I want to hear from you, Mazen, because of your position and experience, any collaboration examples that illustrate how, for example, the work that you do in Central Asia and Africa and so on can be used as a model to do even more with Europe.
Sure. So maybe a couple of success stories, I guess, to mention. As you mentioned, CIS region. The CIS region is somewhere we've invested in quite heavily. I guess specifically Uzbekistan is a country that we can call that as a very good success story. Uzbekistan, as a result of the way they put together their regulation, and this is where developing nations are actually at an advantage to developed nations because regulation is not mature. You're starting off with a bit of a clean slate, right? So you can devise in the way that's most appealing to you. That reduces the red tape effectively. So we in Uzbekistan, for example, in the past few years have invested north of $2 billion of projects, which along obviously with multiple development financial institutions as well, including EBRD, and managed to effectively put together projects of north of 2 gigawatts of solar and wind. So I think that is a very big success story. The other one worth mentioning is you talked about Infinity Power. Infinity Power is where we see Infinity Power as our Africa platform. Currently, they own, operate close to 1.3 gigawatts of projects, but more importantly, they've got a pipeline of close to 10 gigawatts over the near term. So significant growth potential, and that's where we've partnered with the likes of EBRD to effectively allocate capital. So I think those, again, success stories are good examples, and they can be used to effectively execute successful projects elsewhere.
Absolutely. Thank you so much for this. Felicity, I see you're ready to jump in. I can let you jump in or ask you something as a echoing on what Mazen shared with us, because I actually wanted to get back to you. You have a lot of experience, and I want you to help us understand, along the lines of what we heard from Daniel and Mazen, which are the tricks of the game, if you like, which are the ways that you address financing structures, risk mitigation, and so on, so that when you go to developing economies or to emerging markets, you really make things take off the ground.
So I think that's the role that I direct. EBRD is the climate strategy delivery, and our role is to replicate, scale, so do the things again, but do it bigger, and then to unlock what initially looks a little bit complex at the beginning, but looks feasible, but it's a little bit complicated for business as usual banking. So that is the work that I lead. And of course, we really look towards risk mitigation instruments. So the EDF, the European Sustainable Development Fund Plus, is an example which we can tap into for concessional finance and guarantees. And for example, sovereign guarantees. The example in Egypt I gave would not have been possible without the sovereign guarantee, and that's where the clear policies are really important to ensure this predictability, which we mentioned at the beginning, and currency stability. So the EBRD does lend in local currency, and increasingly this is important. But then, of course, you need to hedge the risks of doing that, and you need to be able to tap into capital markets. So we are looking at quite complex structures sometimes, and looking at sustainable linked loans and bonds as structures to help enable that framework that suits the project in the country and helps develop this journey, because the EBRD is an investor for the long term. We're really trying to support with concessional finance, the markets liberalize and the economies themselves drive what we've just said makes business sense. And when it makes business sense, we can take our concessional finance elsewhere to do it at scale, to do these three things: replicate, scale up, and unlock what looks a bit complicated today, but really is the opportunity of tomorrow. So that's our logic. And of course, behind that, replication needs to look simple. And again, that comes back to this predictability and also the storytelling that we're all doing, that hopefully you're listening to, which is this is doable, it's not so complex, and we're all learning how to align different types of finance, different types of structures, and that brings in and comes back to predictability. I'm so grateful you said that at the beginning.
Okay.
Yes, Daniel.
Because I think when you look at countries such as the countries in North Africa or emerging Europe, I think there's a misperception on risk. So the last 12 years, we built this 5 gigawatt portfolio across our 3 funds. We mobilized about $5 billion of capital with project finance. And sometimes the fact that we have delivered this IRR of more than 20% cash on cash to our investors is almost a problem, because people imagine that if you are having high returns, it's because you're taking high risk on these projects. But these are projects that have, without exception, revenues that are 100% in dollars or in euros, where those revenues are guaranteed either by an investment-grade corporation or by a government through a 25-year fixed price power purchase agreement. And these are projects that have guarantees from political risk insurance, from investment-grade institutions, where if that country defaults, you will get your money back. These are projects where Europeans are guaranteeing the construction of the project to your investors. These are projects where global multilaterals are providing 20-year debt on a non-recourse basis. And these are projects that not only they may be located in an emerging market where there are risks, but they're underwritten in a way that billions of dollars of private capital can mobilize. And that's a misperception. That's important that we work on communicating that that's something we can manage.
No, that's so true. I find it very interesting hearing both of you, especially Felicity and you, Mazen, coming from the side of developers, and then you, Daniel, in the middle, making things happen on the ground, which I think is very important. But it's like I see from the two sides of a glass, and I see the same picture. Stability, regulation, predictability, then finding which is the entry point in those emerging markets and so on. I don't know if you want to add something on this from your experience, again, especially focusing on this triangular collaboration that I mentioned before, because you have Europe, you have the GCC region, and then you have the broader MENA in Africa. And I think this is where we can start pointing down to the exact things that we can do on the ground and the opportunities and possibilities we have. I'll come back to you, Daniel, with the same question, actually, on what we need to do to work more in this triangular cooperation between Europe, MENA, and GCC, or GCC and MENA. So, Mazen, please.
Yeah, I think from my perspective, like we at Masdar, we have obviously a lot of relationships with the development financial institutions. Those relationships are primarily based around the non-recourse project financing side of things. So that's something that is a model that has worked and works really, really well. I think one thing which I would say is which would help facilitate the flow of capital even more is coming up with similar to Infinity Power, co-investment platforms. Co-investment platforms which are not just specific to individual projects or individual countries, but more regions. So multi-country platforms which would then help with the deployment of capital. Yes, arranging non-recourse project financing at the project level is something which is doable, and it's a model that works, but taking that to the next step and effectively coming up with solutions in terms of raising equity, more equity at the higher level. So that for us has worked really well at Infinity Power. Felicity, I'm sure, has a lot to say about that.
Because we've been working on country platforms, which is trying to get country ambition to pull in concessional finance in a more strategic way to drive. So we were looking in Egypt, so we have the NOEFI platform, which some of you may have heard of, and in Turkey we have TDIP, which is focused on transforming industrial decarbonization, and we're looking also in at early stages, but in Kazakhstan and Uzbekistan. And what it is like this, exactly this approach, but looking at it from our side of how to drive DFI concessional finance, which is increasingly scarce, to align, to help pull in to what's needed when and where to support the pipeline. Now that country platform can be applied, that logic, which is what you're saying, can be applied at a city level, but also we look at supply chain financing in different sectors. And I think, really what we're saying is, in order to get the scale and to get the efficiencies of scale and to replicate, we need to drive more than just a single project. We need to have a view of a platform or portfolio of activities, and you get synergies and you get this predictability and this flow. So it really helps. Yeah.
Yeah, no, thank you very much for this point, because I think you raised 2 points that I think are very important. When we're working also with the countries here in the GCC through our project, we need to take into account, when we understood this, we need to take into account the full value chain of what you do when you do it. So thank you for bringing this up. And also the countries, and Mazen, you brought that first up, getting the countries that are on the receiving end to really put skin in the game. That's very important. Otherwise, you don't have, everything else is words. But I think putting, those kinds of funds and capitals and all that, we will have to close in 2 minutes. So what I want to ask you is the following. There was a gentleman speaking about space before here, and he asked this fantastic question: who would like to go with me to space tomorrow? And people were just raising their hands. So what I want you to do is to speak to us about the dream. We are where we are today. What is your dream for really scaling up what we're discussing, especially in that field of green transition, green energy, safe water, and so on, in this triangular or broader sense? But I want you to really share with us your dream for the next 10 or so years. What would you like to see? Daniel, go first.
So, look, I came to this region because of an opportunity to work at Masdar. Yeah, so I worked with Dr. Sultan in the early days, and what Mubadala did is they made a large investment to be able to enter countries where renewable energy was not there before. First wind farm in Jordan, first wind farm in Egypt, first wind farms in... And when we were starting Al-Qastar a few years later, that was the fear, is can we build this scale to be able to do wind and solar development in these difficult countries? Once you're managing a few $1 billion, debt, equity, etc., and you have that compass, one of our investors calls us the G-Wagon of renewable energy. So once you develop a safe vehicle to go to these markets, you realize that there are hundreds of billions of investments that are not being invested. Just like I described the opportunity in Egypt, the opportunity in Macedonia, you have Jordan, you have Central Asia, you have other countries of Africa. We have identified about $270 billion of opportunities. The bottleneck in our office is teams to be able to go and address this. So their dream is that one day, these opportunities, there's an arbitrage. You can produce electricity at 3 cents in Egypt and make a much higher return than making electricity at 9, 10 cents in Germany. Well, maybe one day there will be so much investment in these countries that they will not be dependent on gas, and you will be able to manufacture steel, to manufacture energy-intensive products that you will be able to export into Europe in other forms, and these economies will flourish as a result.
That's fantastic. This is why I often speak to this energy mega region between Sea Europe and the MENA region. And of course, nobody can blame Masdar for not having a dream or a vision. So please share with us your thoughts.
So maybe in just a couple of lines, I think to your point, dream vision. I think it's given the technological advances that we've seen, the cost of production, the significant decline, and we only expect that to be more and more. The pace at which renewable energy can be deployed. I mean, I think one of the optimal scenarios that I would envision is in 10 years from now, more than 50%, if not more, of the energy source is coming from renewables, and because of these various reasons that I mentioned.
Thank you so much, Mazen. And Felicity, please.
Just in brief, I think we would love to see a real move from discrete projects to portfolios, platforms, or city-led initiatives where you have a really cost-effective approach to infrastructure, desalination and water and energy, because it is at the nexus, and that's what we're talking about. It's not just energy or, it's all of them together. And once we see that, we'll have better projects. And so that's what I'd like to talk about next year.
Wonderful, wonderful. Thank you so much. I told you they're a fantastic bunch of speakers. So please join me in giving a very strong hand of applause to our speakers. Thank you so much.